Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone, and welcome to a new ATFX video. How are you doing? How are you? Welcome everyone to all of you who are lovers and followers of the financial markets, trying to find the truth behind the numbers and predict where is the price going next move. In this occasion, once again, I'm gonna give you a quick update about what is going on in the market. We're gonna review the main data. We're gonna also keep a view on what's happened on the biggest equity market in the world, which is the US stock exchange. Also, we're going to take a look in Europe, commodities, currencies. Well, mainly I'm going to give you the whole global picture of what's going on in the market. We're going to start with the vision of Asia. Well, we got the sectors on the screen right now, but I'm more interested to show you about the movement of the price and also give you, in terms of macroeconomic, what was the last update, what was the last numbers. We got yesterday, Monday, we got the PMI manufacturing index from China, which it was better than expected. It's interesting because, let me remind you one more time, I'm doing every single morning a full report of fundamentals, perspectives of global markets. So you can see here all details about what is going on and why it's going on. The more important thing is why it's happening, what is happening. So in this case, we got the PMI from China yesterday. It was 50.1 versus 50.9 in the previous period. So the manufacturing activity in China seems to be improving. It's good because the last two months since January, February, and now March also are giving good numbers from a macroeconomical perspective, proving that China is improving somehow since 2023. Remember, once again, the main concern we got on 2023 was a serious problem on financial markets in China, mainly caused by the real estate market, which is still a problem because it's the weakest point for the Chinese economy. But as you can see here, we have shown this chart many times. This is Hang Seng from Hong Kong. The two biggest continental index, Chinese index, is the Hang Seng, Hong Kong, and Shanghai Composite, which is here too. Both of them recovering well. This one is from February. The movement started with announcement from the government of China of new measures, fiscal expansion, new expenditure, and also more flexibility from a monetary policies perspective for real estate particularly. Now we got the PMI manufacturing index improving in China. Let's open the calendar so you can see clearly what was exactly the numbers published yesterday. We also got an improvement in another one of the biggest economies in Asia, which is China, Japan, and South Korea. South Korea improved also the exportations, 3.1% up, which is a good signal of, again, strength in Asian markets. Where we are, I think this was actually on Sunday. Let me check, but data from China came from Sunday, 31st of March. Here we go. Chinese composite PMI, manufacturing PMI, and non-manufacturing PMI. So we got 50.27 on the composite PMI, 50.8 on the manufacturing, and 53 on non-manufacturing PMI, which both of them are improving above the expectations. Composite is so good, 52.7, which as I remind you, whatever is above 50, it means economical expansion. Whatever is below 50 means economical contraction. It's a high and a strong contrast with the numbers coming from Europe. Germany is actually presenting a manufacturing PMI of 41.9%. Massive economical contraction. We got certain numbers from today from Germany, which is the inflation rate. It was 2.2% on March, dropping to 2.2%, which is a really good and positive number. But the only problem is the inflation is dropping in Germany because the problem with inflation is gone in terms of high prices on energy, price, and so on. What it was affecting actually in 2022, or is because the economy is in contraction. So the inflation, if the inflation means the prices are rising, usually the prices are rising because there is a high demand. At least the aggregate demand is strong and the people are going out and consuming. And that's what is feeding up the inflation. The relation between unemployment rate and inflation is because the salaries are keeping or feeding the inflation up. So if the inflation is dropping in Germany, it means that economical activity in Germany probably is in under depression, which is probably the situation right now, because if you take a look also on the growth rate of Germany is so low. Germany growth rate minus 0.03%, as you can see, is completely flat. So that's one of the reasons why this is happening. Also, we got low levels on industrial production. For example, the industrial production from Japan from the last period was 3.40%, if I'm not wrong. So it clearly means that China is giving good numbers. South Korea is giving also good numbers in terms of exportation, mainly by increase on demand of microchip, which is good also because indicates an improvement on economical global conditions. But still, the threat on Asia, which is the second biggest economy, I'm talking about United States, I'm talking about Asia, has China, Japan, South Korea, as one of the 3 points of the biggest economical bloc in the world after United States, and obviously the third one, which is Europe. I have been taking few notes just to remind you what is the main threats that we can see in the Chinese economy, which is also affecting, I mentioned also in the reports that it could affect and also the situation with oil. We're gonna take a look on the charts, but mainly the oil market is rising super strongly. Particularly Brent is the one who is rising very strong, breaking up the main resistance we have been providing for the last few weeks, which is here. As you can see, the area of 85, 86, even $88 per barrel has been broken up, and therefore it means, like, obviously the price is trying to reach a new goal, so new target, which probably is around $90, $95 per barrel. So let's see how it's going. But one of the reasons this threat related with China is that China is the main consumer of oil, and therefore, regardless what is going on in the geopolitical perspective, which is something I mentioned also in the report, Israel, Iran tensions. A few hours ago, the government of Iran has just been declared that in the next 48 hours they could take actions to repress or to punish the actions taken by Israel over the Sunday to Monday when they attack the consulate of Iran in Syria, and they kill few members of the Royal Guard, the military guard of Iran. So Iran has promised revenge in the next 48 hours. So I believe that's one of the reasons why the gold is rising strongly, and oil too. Just as a reminder, also, Iran was one of the countries who promised that if something happens, if they under attack, they say this back in 2011 when all the the spring revolutions on Middle East affecting Syria, Egypt, Libya, Iraq. In that case, Iran said if by any chance Iran is attacked, or they consider that Syria is invaded by the United States, they could be considered Iran is actually under attack, and therefore they could close the Hormuz area, which is the area where the main exportation roads of oil pass through Yemen and Saudi Arabia. Therefore, they can actually affect the supply chain of energy worldwide. So because that's the case, everything related with Iran and military tensions could put the oil under threat. Again, let's go to the 5 points that is a main threat from the Chinese economy. First of all is the weak property sector, which is something we have been analyzing for the last year and a half in relation with the mortgage, the credits, and the high leverage of the real estate in China. We also got the low internal demand because one of the main weakness points of Chinese economy is the high dependency on the external demand. So that's why they try to stimulate, improve, and reinforce the internal demand. And we have seen that it's not so strong the last few months in China. We also got the decrease on the trade surplus, which is still good. It's a surplus from China, but it's not as high as it was in the past. We even saw 2 quarters ago, we saw a drop of 14% of exportations on China, which is massive drop. but they are recovering faster. So that problem is also still there, but they are improving. Local government debt is the fourth point that is actually a threat, because we have seen how many local governments in China are facing actually problems to face the liabilities they got it. And the last one is the trade war, because still Europe is deciding and is discussing with European Union and even United States as discussing what kind of assets can be import free or under certain restrictions of fees to European Union and to United States. We are talking about mainly strategic assets like soils and everything involved with the development of circuits, semiconductors, chips, microchips, and stuff like that. So the trade war is still there, in summary. And that's the main threat the Chinese economy got it, because again China has highly dependency of the exportations. Now, United States PMI also published yesterday. It was 1.5 factory orders up 1.4%, 1.4% up the factory orders, which also show us that the US economy is not at all weak and is actually showing certain positive numbers, proving that the situation in United States is not bad at all. Factory orders 1.4% versus the 1.1 expected, which again, it shows us that it's strong and is giving us a signals that regardless the interest rates, the labor market is still strong, and also the industry is responding well. So that's the main mystery in United States. How it's possible that after increase the interest rates that fast, the economy still is not giving any signs of recession, which is what the Federal Reserve was expecting to cut the interest rates. That's why by December they announced that in this year we will see a few interest rate cuts. It was exactly the promise that the market needed just to start 2024 with optimism, which is what happened. But now the mainly question is, it's really needed the cut of interest rates, and this question is actually on the mouth of all good part of the members of the Federal Reserve. Waller, Baltic, all of them have been making comments about how urgently or how necessarily is, realistically speaking, to cut the interest rates. It's not at all. It's actually needed, and so on. So that's the main debate and question. And why it's important, because if after all they decide that actually they don't really need to cut interest rates, the market gonna drop massively, because all this movement we have seen for the last 2-3 months has been motivated by the promise of cut interest rates done in December. You see, this is November, a weak labor market report was published and the market was rising up, and then by December Jerome Powell promised that they will cut interest rates the next year. Since then we have seen how the market has been rising with no correction. Mainly a few distortions in the price, but not really a deeply correction that could give us the confidence that the market is actually rising in strong supports. Is not the case. As you can see, only lateral market from half of December to half of January, but after that rising and rising in the same proportion. So we can see that obviously the market is super optimistic right now about that interest rate cuts. If that interest rate cut never happened, or they cancel the idea, or they change their mind, it's going to cause a correction on the market, obviously. And this is the interesting thing. Pay attention to the charts. This is the dollar. And now it's dropping, but has been rising. The beginning of the week, even yesterday, was almost in 105 points. Actually, the highest point, it was 105.10, which is it's a surprise, because if the expectation is a cut on interest rates, we should actually see this index dropping, not rising. Dropping since it was announced, which it was in December. So something is not actually in line with the expectation. You see, this is the drop caused by Jerome Powell when they announced the interest rate cut. Since then, Jerome Powell announced the interest rate cuts, dollar was dropping, but for some reason dollar has been rising and recovered certain levels. Negative labor market report again dropped the market, but since then rise again. Even regardless the last speech of Jerome Powell mentioning that still they will cut interest rates, it was that candle there in red, but a part of that was rising. Now we got these two candles probably caused by declarations. Let's take a look. Declarations of members of Federal Reserve. Let me open the chats to see the last comments. But I'm sure that this drop is caused. You see, we got here the speech of Jerome Powell, and he probably saying something motivated. Let me share with you, motivating this interpretation by the market. There are risks to cutting rates too soon, as well as waiting too long. Okay, this is nothing, right? There is a risk waiting to cutting too soon or waiting too long, of course. So what do you mean exactly with this? Side recovery is stimulating new demand and supply. It's too soon to conclude disconnect in monetary transmission. I do think monetary policies is working. The capacity of the economy move up perhaps more than the output. Inflation expectations are consistent with 2% inflation. Everything is positive. There may be more supply gains, supply side gains to be had, and monetary policy side was slightly from demand overcoming. Well, mainly what he's saying is like everything is going according with the plan, blah 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 blah. Everything is going according with the plan, and the situation is actually favorable for interest rate cuts. That's why I believe is just dropping. But as you can see, it's far to be clear that the interest rate cut is going to happen, regardless how many times he's insisting that it's going to happen. Because we got factory orders today 1.4%, even above the levels of expected. And again, interest rate cuts is a measure taken to stimulate the economy when the economy is dropping. Unemployment rate is not rising. Industrial production is going well. PMIs are strong. So therefore, even retail sales doesn't seem to be really weak. So based on this macroeconomic data, they know it because this is the data that central banks are using to design the policies or to justify the decisions they are taking. And based on that factors, based on that variables, they do not have arguments to cut the interest rates right now, and they know it. If you go to a 2 years bond, you will see that it's actually same situation is rising. This drop was caused by the promise of cut interest rates. By the end of February, market was not buying anymore that promise, and it was rising the yield. The yield came to 4.7, 1, 2, and 3, almost 3 times to 4.7% of return. It's actually causing now a kind of pattern of breakup. And in this case, if it's breaking up in this direction, which is what more or less the chart could indicate, if it's breaking up in that direction, it means no interest rate cuts, at least not when it was expected, which is July, maybe even September. So if something happens, I telling you, if the yield is going above the 4.7%, 4.8% yield return, it probably means that the interest rate cuts is once again move forward on the calendar, and therefore equity market gonna start to get nervous, because it obviously has been rising under the promise that interest rate cuts will happen in March. That's what the market was discounting in December, interest rate cuts by March. Okay, we are in April. There is no interest rates on the horizon, and we don't know exactly when they're gonna take the decision. And still, they use the same arguments to say yes or not to that interest rate cut decision. On the other hand, we got the gold rising, new maximums, $2,300 mainly. Let's see what was the last $2,295 was the maximum price registry on gold price, and still is breaking up, is rising. There are many reasons why the people believe their gold is rising. One of them is the geopolitical risk. But again, geopolitical risk is just one factor, and it should be kind of flash movement and retracement on the price. We are not seeing this. We see that after week, the price is rising, and is keeping certain consistency, which therefore could means even also a change on the behavior of the central banks, particularly from Asia. All of those countries, mainly China, who have seen how Russian assets, $300,000 millions of dollars has been blocked in Euroclear from European Union. US, United Kingdom has been actually defending the idea with European Union to use those assets to fund BlackRock and recovery funds for Ukraine. European Union still has been discussing the idea of use the yield or the interest generated by those assets frozen in Euroclear to help Ukraine. But still, the main concerns from the European countries was how legal it is using these assets from another country, which is the assets of the whole nation, which is Russia. to fund this, regardless what's the opinion you got about one government. This is the assets of the whole population of Russia, territories of Russia. So therefore, if they touch that, probably China is watching, is observing, and say, well, take a look what's going on with Russia. Tomorrow, if they decide to frozen my assets, they can do that quickly. So I believe that probably those countries who have seen what happens with Russia are probably moving from dollar reserves to gold, physical gold, central bankers, big hands. I'm not talking about just hedge funds. I'm talking about big hands that strategically are taking their national assets and depositing a different asset, which is mainly gold, because euro is not an alternative, realistic alternative, given the situation of European Union right now. So in that case, we got a euro dollar who is rising back again, but again, the expectation with euro dollar is drop because euro is weak, dollar United States is strong, so therefore European currency should be dropping against the dollar. So euro dollar down based on the macroeconomical data we got today from Europe. Still, the European market is rising. You got the DAX 40 here on the screen and is trying to reach a new records. I will say probably close to 19,000 points. Right now we are in 18,361, but the last maximum registry on last Friday was 18,634, and therefore probably the new psychological barrier or price will be 19,000 points. Still, there is no reason for this. I don't see clearly who is buying equity on Germany, considering the numbers of Germany, which is an economy that is in recession and is giving super bad numbers. Last week, again, PMI, manufacturing PMI, it was 41.9%, 41.9 points for Germany, which is super extremely low, super weak, and indicate a strong contraction in the economy of Germany. But still, the market is not reflecting this situation, and therefore, obviously, it's going to affect the earnings of the companies, the German companies, in the coming months. But it's not reflecting right now on the price. So do not be surprised by that. Oil has been rising. We mentioned this already, and one of the equities we mentioned time ago, back in December, it was ExxonMobil when it was at 960, 980. Remember, by this sum, we were saying this is one of the most interesting sectors to buy in United States because it's super discounted. It's in minimums of the last year and a half, 2 years, and therefore by the time the oil is recovering, probably we're gonna see how this price is moving to the levels of 120. Right now we are in 119.25. Therefore, we were right. Anyways, I hope you enjoy this report, and again, if you really like it and you are enjoying and you follow me, because I have seen many likes and 20-30 likes per video at least I have seen the last few weeks, and also a good numbers of new views. If you like this, please give me your thumb up and subscribe the channel so I will see that you are there. And remember, follow up also, not just this, but the channel, the blog that we got on atfxconnect.com. You go to the section of blog, market snacks, and you got the whole report with all details every single morning to just get a fresh update, okay? Take care and see you in the next reports. Bye-bye.